Oh, how's it been, bro?
I actually feel amazing.
72-hour water fast, bro?
Yeah, I feel good though. Like I'm hungry, but like you feel pretty good when you're on it.
Do you feel like clear? Like, what's the benefits here? We're talking
You feel
about
very clear-headed for sure.
okay.
I woke up at four o'clock today. I set my alarm for 5 o'clock in the morning. I woke up at 4 o'clock and I was just wide awake, ready to go.
That's a long time, bro. 72
Yeah,
hours? Might have
yeah,
to
I'm
give it a
hungry.
try.
I am hungry though. I'm not gonna lie. But no, I feel good.
I think the caffeine would be a bigger issue for me than the food. I'm just gonna be honest. I think I can go 3 days without.
Not, not really. You actually have energy in the mornings when you don't consume food.
Mhm.
Yeah, it's weird.
All right. Well, noted.
Yeah. Like day two, I woke up at 5:30 in the morning and I just sprung out of bed and just started my day.
Huh. Interesting.
Mhm.
All right. Well, fasting might be the way. All right, ladies and gentlemen, if you guys are watching on YouTube, welcome back. CPI news came out higher than expected, just slightly higher than expected. I still expect like the key theme for this year, the consensus I've seen from all the banks, from all the hedge fund guys I'm talking to, from almost every professional investor, is that consumer inflation is going to come down this year, but asset inflation is going to go up. So if you own stocks or traditional assets or even crypto, it's going to be a great year for you. If you don't own any assets and you're living paycheck to paycheck, this is where it's going to become a bit of a trouble because prices at the grocery stores keep going up. I mean, ideally, they should be going down in 2024, but based on this information, they're still slightly elevated. And so prices at the grocery stores are high, and you don't own assets that are going to offset the difference. And so this is a little bit higher than expected. I think the market will use this as a chance to make a retracement, much needed one after this long expansion. After we see that pull back to about 16,700, that's where I'll be looking to take another long position for the final leg of this move. If the market starts to break these areas, like if it breaks 16,680, if it breaks below 16,600, chances are it's coming all the way back down to the lows. So we only need a few levels to get broken to verify that this thing is reversing, not reversing, but doing a higher time frame pullback. And that's when we can just wait for it at the very bottom and take a double bottom here. So for now, I took a short position right at the news, still holding in break even, and I'm still holding a runner from the longs this week. You guys can see let me just delete all this stuff. So these were actually taken not yesterday, but 2 days ago. This was off of the wick retest. And then this is the entry off of the retest of the 520 zone. So for reference, this area right here, this like break and retest, I took an entry right there, and I took an entry on that wick. Okay, that was a little bit shady, but let it go. And I'm also in a short position at the top. It's a hedge. I've already closed the majority of my positions, and I have this one sitting in break even. I'm going to secure partial profits again.
Is
All right. Good morning. Good morning. Good morning. We'll go through the CPI report here, see what they got for us. But I do need this coffee to show up. Oh, right on time. I just got a message 1 minute away. So in 1 minute, I'm gonna hop off, go grab this coffee from the door and come back, just in case you guys didn't get a heads up here. We're gonna take a look at the CPI report and see if there's anything noteworthy in here. And because I don't want to miss anything, let me actually do the dual screen here. We'll do dual screen, get the CPI right here, move that out to where I can see it. Okay, so now I can see both. All right, CPI fell, or CPI increased 0.3% in December after rising 0.1 in November. So that's 2 months where the growth rate's still high and we're still rising on an annualized basis. Bureau of Labor Statistics increased 3.4%. So it was just at 3.2% inflation or CPI. Now it's at 3.4. Not the end of the world. It's still early in the year. This is for December's numbers, by the way. Let's see where the biggest gains were. Huh, this is very interesting. So the two biggest components of everyone's budget is typically housing, energy, and food. So gas and electricity and bills, and then also transportation and housing. Usually there's two numbers that are released. There's a headline CPI, which includes like a basket, and it's an index of a basket of consumer goods that they just track. And then there's core CPI, which excludes food and energy. Because typically those fluctuate so much, they tend to mess up the numbers and give an unrealistic perspective on what CPI is. So what I'm looking at here is I was expecting core CPI to be lower, but no. It says the index for all items minus food and energy went up by 0.3%. So core CPI still went up by 0.3%. So take gas prices out of the picture, take food prices that keep fluctuating out of the picture. The rest of the consumer goods basket still rose by 0.3% in December. Okay. The index, which increased in December, includes shelter. So I'm assuming this is rentals, motor vehicle insurance. I'm feeling that. I live down here in Florida. Motor vehicle insurance is insane here. Medical care, that one makes sense. The index for household furnishings and operations index for personal care were amongst those that decreased. So household furnishings and personal care, those went down. All items rose 3.4% in 12 months. So this is not 3.4% in 12 months. The way they calculate this is they take the 0.3% number that we increased on a month over month, and they just multiply that by 12 to get like the annual running number. So we have all items less food and energy rose by 3.9% in the last 12 months. So core CPI is up 3.9%, almost 4. The 4 range is not good. Anything below 4% CPI, we're actually in a pretty good territory for the Fed to relax their policies. Once we see 3.9 and potentially higher, that means the Fed is going to have to be a little bit more aggressive. So look at food and energy. Could gas prices go up if there's another conflict that breaks out in Russia, or that the Red Sea gets blocked again, or the Middle East has an escalation? Of course, gas prices could go up. And so that would make core CPI go through the roof. So that's like really, I think that gas prices are holding CPI together for now. Ladies and gents, let me go grab this coffee real quick. I'll be right back. If you're just hopping on, we are reviewing the CPI news that just came out, and also we're keeping an eye on this trade that we took before the news. Also looking for a pullback to 16,700 for a re-entry. Keep you guys posted here. I'll be back in just 2 minutes. All right, I'm back. And yes, I'm in a great mood. I can smell the coffee from my desk. You guys know it's serious when they give you the little cups. All right. I'm in a mistake. I'm new to Florida, so I came down here. The Cubans, they got a great coffee culture. So they handed me this thing at first, and I thought it was an espresso. So I was like, all right, I'm gonna drink this. And then I got cracked out. I was just uncomfortable. I wasn't feeling good. I went to go hang out with some Cubans, and they were taking out this thing. This thing is like a thimble. It's like a little mini cup. No drink should be so strong that you need a mini cup like this. Okay, this should be a crime. But yeah, they told me that you're supposed to pour it in this cup and then drink it one serving at a time, and that the actual container has like 10 or 15 servings in it. I'm like, yeah, why don't y'all just make a weaker drink? Like, why is this thing so concentrated, bro? That's crazy. Walter said, Colada came to my door too. Liquid cocaine. Man, you guys are hip. Walter, where are you from? And then Mike, where are you from? Okay. Fruit for breakfast better than coffee, more sustainable natural energy, my G. Well, I actually disagree with that because here's the deal. Whenever you consume sugar, and that includes glucose and sucrose, your body spikes or your body releases insulin to counteract that sugar and to basically be able to send that sugar out into the bloodstream. So every time that you eat sugar in the day, that includes fruits, and especially if you're going to go like the unhealthy breakfast route, which is like the cereals and all that crap, take that aside. Just talk about like orange juice and fruits. It's going to spike your insulin. What happens when you spike your insulin is you start to crave more sugar during the day, and it creates this like vicious cycle where you're constantly craving more and more carbs throughout the day. And so I'm trying to avoid that insulin spiral, and that's why I typically fast halfway through my day, and then I'll break my fast with something high fat, high protein, save my carbs for later at night. Now I know that coffee does have a crash associated with it too, but that's when you just drink another one. That's when you just keep the show rolling. Where can I check this website? This is called Forex Factory. And then the actual website where I'm reading the CPI news, this is the Bureau of Labor Statistics government website, where they release all the latest economic news for the Bureau of Labor Statistics. All right. Energy prices rose by 0.4% in December after decreasing 2.3% in November. So again, keep in mind, the scheme that was ran by the Biden administration was to dig into the Strategic Petroleum Reserves, which is an emergency reserve fund that we have in case of a life or death situations like a war, where we can have extra gas for the country. But Biden wanted to get reelected. We were having issues with Russia and Saudi Arabia at the same time. So instead of going out there and making friends with Saudi Arabia and Russia, which is what America should have done, Biden went out there and begged Venezuela for gas. It helped for a little bit, and then he realized that it wasn't enough. Gas prices were still climbing in America, so he dug into the strategic petroleum reserves just so that people don't get mad. Guys, I want to remind you that when Ukraine and Russia thing happened, America was not affected. Now, I know that there were some supply chain issues, but not to the point where we should have dug into the strategic reserves. The SPR is for war, not for making sure people don't get mad at you so you can get reelected. Craziness. So now here's the danger. This is for the United States, is that if we actually do get into an emergency, what are we going to do? We've already depleted the SPR by 50%. So what more ammo do we have? Glass of water as soon as you wake up. I switch to the same diet, no carbs till my third meal. Yep, yep. So before I drink coffee or anything, first it's electrolytes. Because your body responds to salt, and not just I'm not talking about just table salt, but I mean all different kinds of electrolytes, potassium included, calcium included. That's going to help wake you up a lot more than coffee at the beginning. Now, after the first hour, once you're out of that sleep phase, you're kind of out of that, like, really the fog, then coffee is going to have the best effect. You guys can look up the adenosine system and see when it's active. The adenosine system is basically like a receptor that builds up this, like, it builds up this signal or this, like, I'm not a fucking scientist. I'm going to butcher this thing. But here's basically the way that it was explained to me. Basically, it's a receptor, and then throughout the day, there's things that deposit at the end of this receptor. And then once signals can no longer get through to that receptor, you basically start to feel that tired feeling. And that's the deposit and buildup of this thing called adenosine, whatever the fuck it is. So essentially, coffee doesn't wake you up. It just stops the blockage of this receptor and stops you from feeling tired. Now, because you actually need to stimulate your central nervous system in the morning, electrolytes and salts have a way better chance of activating your CNS than just caffeine, because caffeine doesn't actually wake you up again. It just makes you feel not tired. Do your own research. I'm not a medical professional by any stretch of the imagination. What's going on, guys? I'm in NAS cells. Welcome to the party. Well, I'm in buys and sells. So I have you beat. All right. So I just drew a quick fib here. From the low of this local impulse to the high to this wick, we're getting a nice pullback. We already had a pullback about 60%. I am looking for the 88% to get retested. So there's one more push down to the 88, and then we can potentially take entries down here at 16,690. That's where I'm looking for. Yeah, that's why I feel like half asleep or you just woke up and then you just try to go immediately to coffee and you start to realize it's not having that effect. Trust me, wait 30 minutes to an hour before drinking caffeine in the morning. It will change your life. The hardest thing I ever did was get into the habit of going to the gym before I consume caffeine. Because it's tough. Everyone wants to drink some kind of pre-workout. You guys know I love Bang Energy. So it's really tough for me in the mornings to not just reach for the caffeine and get the day started. But if you can get through that morning period and go do something hard without any caffeine, with any help, then you come home, you get ready, you shower, and have some caffeine, your day is unstoppable. If you rely on caffeine and other things like that too much, you're gonna lose the effectiveness of these things. He said sugar-free liquid IV is the first thing I put in my body. That's exactly what I had this morning. That's exactly what I had every day for the past week and a half. It's amazing because it's got all the electrolytes you need all at once. No sugar, so it's not going to give you that insulin spike. And gets straight to the point, high concentration too. Man, shout out the fucking mon Imagine this was 30 years ago. Look, oh, my back hurts. And you just gotta sit there and just fucking deal with it. Like, oh, I'm tired. Just, I don't know, drink more coffee. Drink this Coca-Cola. It might help wake you up. Now we got all this information out here. We got YouTube. If you guys want to know the best podcast for health-related things, I watched the Huberman Lab podcast with Andrew Huberman. Absolutely brilliant scientist from out in, I think it's MIT or Stanford, MIT, one of these fucking schools, one of the top research schools. And he just does a podcast called the Huberman Lab, breaking down different things about, there's different things about optimizing your performance. All right, let's go through a quick currency outlook. DXY is still bullish. I keep seeing people like switching their bias every day. Bro, let me give you guys a fucking advice for indices like this, for currency indices. Just go to the higher time frame. I saw a dude on Twitter that was posting like every 2 hours asking people if the market's going to break out of this little 30-minute range. Bro, nobody fucking knows. I hate to break it to you. No one knows. But I'm going to tell you guys this as a very, very high probability of the market doing this. Okay, why? Not because I said so, because I think so, or because I'm so smart, but because observation means I'm using my freaking eyes. Every time the market gets here, it seems to invite a lot of buying interest. Market gets here, invite a lot of buying interest. Market got here, the buying interest was a little bit late to the party, but when they showed up big time. And now we're right back at that same zone. So everybody can tell me what they think is going to happen or what they want to happen. That's cute. What is the market telling us? When I say look left, what I'm referring to is looking left for the historical data because markets are a creature of habit. And if the market has done something consistently at a zone, chances are the next time it gets there, it's going to do the same thing. It's that simple. By the way, note the energy levels going up throughout the call as this cafecito starts to hit. Because I'm gonna be real with y'all, I never drink Cuban coffee. If I drink coffee, it's like a regular American coffee. I might have an espresso every once in a while. The Cuban coffee is this is like a thing of legends. You guys know how what was his name? Is it Ponce de Leon? Who's the guy that was looking for the fountain of youth? Fuck, dude. Am I spacing on history? Is it not Ferdinand? Is it Ferdinand Magellan? Whatever. This is what Ferdinand Magellan died for. This is what he was trying to circumnavigate the globe for. Was the fountain of youth. He was looking for Cuban coffee. Went halfway across the world, discovered half of the free world, and all he wanted was this. Oh, he said Cortez. James, see how embarrassing it is? Like, how did you know what I'm saying? Missed that one. How do you know? Said lemon lime is my favorite. Bryce, that's exactly what I had today. That's crazy. All right, other currencies, how we doing? EJ is going to go to TP. I believe so. I believe that EJ is going to 167. I don't trade Euro JPY, but this is just something that I've been tracking here. Bitcoin is back on the move after a tumultuous week. So there's two news events I want to talk to you guys about. Number one, I want to give you guys updates on the US elections. Number two, I want to talk about the Bitcoin ETF approval, which is big news. We've been talking about it all week, and actually posted an article about this yesterday, kind of doing a quick breakdown of how this played out. So you guys know there was a false flag. The SEC Twitter account got hacked. Look, the best comment I saw about this whole thing, top comment on Gary Gensler's post. Gary Gensler's post has about 85 million impressions. Like half of America saw this blunder. Top comment is, how are you supposed to protect consumers if you can't even protect your Twitter account? Mic drop. It was savage, but they have a point. These are the people in charge of our consumer protection rights. They're the ones who are stifling crypto innovation in this country and stopping people from making money. And they can't even protect their Twitter account. How do you understand crypto cybersecurity? Like, how are they approving this stuff without a real in-depth knowledge? Now, I don't want to go at the SEC because there are some very smart hackers out there. And if they hack the SEC and are taking advantage of them to make them look bad so they can pump Bitcoin's price, then okay, the SEC was attacked and we really should take that one serious. But I don't think that's what happened. I don't think that's what happened at all. I think this was I don't think that the message was supposed to get out to anybody because I got sent this from someone on Twitter, which was the approval paperwork before they took it down. And now if I try to find it on the SEC's website, it gives me a 404 error page. Sketchy. Here it is. I'm actually going to send these to myself here. Beautiful. Okay, so the SEC had posted this on their website, and actually, let me check on NASDAQ real quick to make sure that this wasn't the low here. All right, so we've broken cleanly below the Australia session lows. Clear, solid candle break under with with no wick or anything in between. This is usually a sign that we have more downside to go. So if you can think about it, here's the most recent floor, and then we have another floor right here. Very obvious. We have this accumulation zone right here. So this is like a sideways consolidation, picking up some gas before the move, impulsive push up. And now we're just looking for an 88.6 correction. $88.6. So we are rejecting the 61 right now. We have this kind of like double bottom situation. If the market recovers, here's my higher time frame continuation signal. is if the market breaks above the 38.2, I'm about to give you guys some stupid game. If the market stays above the 38.2, that's a shallow retracement. Typically, you have a very aggressive move that follows. When you have a deep retracement down to like the 88.6, then you're going to start to have this sort of ladder movement up, and then it'll get aggressive. Once the market has confirmed that it's closed above this high, so you start to form a floor, that's where you see an aggressive push to break us out of this range right here. Long story short, here's the two options: 88.6 retest, or this thing recovers up and continues. Makes sense to everybody? We clear? Very straightforward. I'm gonna head down to the 1 hour here just to get some more detail. And I'm going to secure partials in case the market does want to come all the way back up. All right, good stuff. Let me go right here. The CPI news is very straightforward. I am a little bit surprised, but it's just one print, so it's not too crazy. Okay. Shout out to what is their name? I got to give them credit. To Unusual Whales on Twitter. They ended up putting all these documents on this Giazzo account because they knew that the SEC was going to pull something shady and take them down. And so when I went back and tried to find it on the SEC page, I got this 404 error message. So thankfully, they ended up posting the approval paperwork. And this kind of just gave the main details here of who's getting approved and, kind of which precedents they're using to approve it. We got the 1934 Exchange Act. Okay. The NASDAQ Stock Market LLC and the CBOE exchange have both. It says filed with the SEC. Okay, so they both approved. Both of these largest exchanges in the country approved the ETFs from all these private companies. Now the CBOE and the NASDAQ are both waiting for the SEC to hit that stamp of final approval. That's what they were waiting for. Finally got that done. We got the Grayscale Bitcoin Trust, which I'm a very big fan of. They were one of the first Bitcoin indices out there that you can buy. And right now, all these other companies are trying to compete with Grayscale by lowering their fees. Now, I talked to Bob Elliott 2 days ago, and he told me that the fees that BlackRock and Vanguard are proposing are not possible. Like, they're charging such little fees that they're going to lose money on this. And they're doing that to kick legacy players like Grayscale, who set up this whole fucking thing, who have been taking the risk since day one. They want to kick them out of the market. Grayscale's Bitcoin Trust has about a 1.5% fee. And then BlackRock is proposing a 0.2% fee. Now you guys are like 1.5%, 2%. What's the big deal? Let me show you guys what the big deal is when it comes to investing. Let's do interest calculator. I'm going to show you guys something really crazy. Let's say I want to hold Bitcoin for 10 years. And my estimated return on Bitcoin, we went through this yesterday, but I'm going to call it 50%. Actually, 35% on an annualized basis. Excuse me. I'm going to do 100,000 just so we can see these numbers. Okay. The estimated interest rate is 35%. Actually, let's do this with stocks. Let me do this with stocks, actually, because 35% is huge. It's not going to make too big of a difference here. We're going to do 8%, which is the average returns on the market, and then we're going to do a 4% variance here, which means that sometimes it's going to be 12% returns in the market, but sometimes it's going to be 4% on the down months. And so it's going to give us an average of all three of those. Let me show you guys this. So in 10 years, the 100K would be worth about 215,000. But let me show you the difference. And this is about fees. So let's say that the difference in fees is that you're paying 3% or 4%. Okay? The difference is the guy who was paying only, what was it? The guy that was paying no fees would have $310,000. The person that was paying 4% fees would have $215,000. So it'd be like, oh, the fee is 4%. You'd be like, what's the big deal? 4% of 300 grand? That's nothing. Then you start to realize you lost $100,000 in value off of that little 4% fee. Because the amount that you're compounding, this snowball that keeps rolling down the hill every year, the bigger the snowball is, the bigger it's going to, the more snow it's going to collect and the even bigger it's going to be. If this thing is getting cut down along the way, it's hitting trees and getting smaller, it's not going to build up the same momentum as the snowball that would just kept rolling down the empty hill. I hope that example made sense. And the person that was getting rigged on fees has about $150,000 at the end of this exercise. So the difference between a 4% fee, a 6% fee, and a no percent fee is 150 grand, 215 grand, and 310 grand. So then when you think about this in terms of billions of dollars, the difference between a 1.5% fee at Grayscale and the difference between a 0.2% fee at BlackRock makes all the difference when you're compounding this money, especially if you're dealing with the millions, hundreds of millions, and billions of dollars. Does this make sense? This is exactly what Amazon did to drive retailers out of business at the beginning. They would find their the 10 competitors that they have that were at the bottom of the list. And then they would ask themselves, how can we kick them out of business? And so they would sell the exact same products as their competitor for a lower price, undercut them in the market. That way, all their customers go to Amazon. Once they have successfully gotten them out of business, then they will raise their prices to a profitable level. That's why it took Amazon 10 years to be profitable. I believe that these ETFs are going to do the same. They're going to be competitive to the point they kick out all the legacy ETFs, and then they're going to raise their fees to a profitable level. Because right now, 0.2% ain't going to cut it. It's craziness. Okay, he said hedging. Yeah, I'm hedging. And it's not even hedging because I know the direction I'm going, which is long. So I could have just held the longs and just waited for another long position, but higher time frame structure was too good to ignore. Higher time frame structure was too good to ignore. Now, is this a random level, this 899, or have I had this thing meticulously planned and marked off for a while? Whoever got their mic unmuted, let's get it muted up. So here's the receipts, yo. Here's the receipts. 16,899. There are no coincidences in the market. There are no coincidences. I've been calling out this trade since the year started, basically. Let me see. Maybe not since the year started. Maybe just a week ago. All right. So this is one of the early markups here. You guys can see we had a long position, 540 and then 620. Those were the two zones. Market broke directly through both of those two levels and then came back to retest my 16,540 zone perfectly. You can see 16,542, 16,542. And that's where I took this original long position down here. Okay. Then the market had a bullish impulse, break above the previous high. I personally wanted a 50% pullback to the 627 zone. We never got it, but I did end up entering at the bottom of this wick right here, which is this second entry. And then the market just hit this higher time frame sell level, and that's where I took the sells this morning right before news open. All right, so very straightforward, all planned. And then even the re-entry here was planned out very well. This one right here. So you can see the 542 level was the area that I was looking to get retested. And then that's exactly what we got. 16,542. This was the first push. So we had a beautiful bullish engulfing candle, break straight through the highs and kind of confirm that long position. Yesterday we had an absolutely beautiful trade. I'll show you guys that in a second. This is the aftermath. So this is after I took that wick entry. We start to form a new floor. This was yesterday. Beautiful trade going into yesterday. Here it is. Here's the before. In case you guys were on the stream yesterday, this is exactly what it was. Consolidation, breakup, retest, and then here's the after. Beautiful rejection of our zone, straight to the highs. And this thing ended up obviously breaking straight through, going all the way to the 900s. So an absolutely banger trade yesterday. Congratulations to everyone who made money. TP4 did get hit, just in case you guys are wondering. And then this morning, posted this up, higher time frame rejection zone, took a short right before the market open, or not the market open, took a short right before the CPI news. And this is what it looked like right before the rejection. Okay, 16,899. 16,899. Okay. Makes sense. Any questions? How are we good? He said it was Juan de Leon. Cuban coffee is the way. I'm Cuban, and my favorite Cuban coffee is La Lave. La Llave. Man, now you're making me speak Spanish. I can barely speak English yet, bro. The coffee's still hitting. He said, Tranquilo. What's good, Roy? What happened to the challenge you were doing? Still doing it. I was down like 7%. I'm gonna be honest with you guys, but now I'm down about 1% if I'm not mistaken. Not in break even. Beautiful. So I cannot lose this challenge, long story short, because FTMO gave me one shot. If I lose a challenge, I can't buy another one with FTMO because I live in the States. I did talk to a trader who lost their account a few months after they banned Louisiana. And so even if I pass this challenge, get the payout, all this stuff, it's still likely to take this one and the live account. So it's like there's a giant risk now with wasting time 30, 60 days of the year, but then having your account stripped. So I'm starting to look at futures brokers and regulated FX brokers, and I'm starting to shop around at other prop firms to see if, to see if they have a better offer for me. Because it's really just reputationally, I want to make sure that these guys are paying out their folks. There's no manipulation issues in the back end, and there aren't people who just got their account closed and haven't been able to get a payout. So as soon as I can verify the next good prop firm and I use it personally, I'll be doing the challenge live in front of everyone, so you can see the live market conditions and how the conditions are on that platform before you guys sign up for a challenge. So I'll take one for the team, so to speak. But I am talking to a few friends in the industry. And here's the thing. I've talked to some of the biggest prop firm, some of the biggest CEOs of these prop firms. And a lot of these guys are saying it's just an FTMO issue. I don't buy that, but I really hope it's true. I really hope it's true. Good morning. The leverage broker for NAS100 US clients. Okay, brother, you're asking me whatever. AWS is Amazon's profit machine, but we get it. Okay, so you're telling me that their core retail business is not profitable? That wasn't their profit machine? Because they crushed it in retail. AWS was an anomaly. Like, you can't have the world's most successful retail business, the most successful commercial enterprise that's ever existed in world history, and then have a division of your company just be even bigger than that. All right, that makes sense. But AWS played a very smart game. They integrated with government early. They had a CIA contract, which was a 10-year lifetime contract to provide cloud services to the CIA. So they had the advantage in government contracting. But for them to grow bigger than the commercial retail business is insane. So for them to grow bigger than the third-party seller business is insane. But I don't think it's a credit to AWS, because I'm pretty sure Amazon doesn't even run on AWS. They run on Oracle because their shit is so big, AWS can't even handle it. I'm pretty sure it's a credit to Andy Jassy and the fact that he's a genius, and that's why he's CEO now, because he ran that division to the moon. Oh, good morning, Pops. Got my dad's in the chat. Good stuff. That ETF fees explanation was good. I'm not going to curse. Rocket 21, I'm turning over a new leaf, guys. Just do your own research. All right. I ain't getting in the middle of this shit no more. All right. It came back to bite me in the ass. Right. I can't be out here talking this much about everybody and doing all this stuff and then not get a bunch of, not get the rumor mill turned back on me. Okay. So I'm going to be real. Do your own research. If you want to put your money in a place called Rocket 21, that's your prerogative. Just don't come back crying. Be like, I lost money on I'm not gonna keep saying the name. I lost money on. God damn, I can't even make jokes without roasting people, bro. This sucks. This fucking sucks. All right. You're losing your money on Dick Cheese FX. That's your fault. And do your own research, people. It takes about 5 minutes to go on these different websites and look up reviews. Right? Join a Reddit sub article somewhere. 50 guys, sad, haven't gotten a payout. Read the reviews. But I ain't getting in the middle of nothing. No more. Said yesterday's trade was a banger. Yeah, it was. Come on now. And how'd you feel being down 7%? Not good. What? Bro, I'm dealing with all this BS. I have a very busy schedule because I'm constantly working with people from overseas. I'm constantly doing logistics for the FX Summit now because we're really ramping up. Where spots are filling up for sponsors and exhibitors. We have speakers from all over the world that we're talking to. So I'm all over the place. And I'm sitting here down 7%. But I always tell myself the same thing because look, I'm not a stranger to being in drawdown, especially on challenges. That's kind of my specialty is I'm a little bit high risk. I kind of get a little bit loose with it. And then I end up down 5% or 6%. And that's when I turn on and I'm like, all right, no more bullshit, no more high risk. Time to buckle down. When you Here's the phrase that always goes into my mind when I'm in that situation. You can't over leverage your way out of a problem that over leverage got you into. So whenever I'm down, the inclination for me is to take a trade, get a little bit heavy on it, recoup 2-3% right away, and just start to build that cushion back so I'm in break even. Can't do that. You want to take shortcuts. This is how I think about building an account. It's like climbing a mountain. And you're supposed to climb it on a path, and you're supposed to just be steady, and you're supposed to just go up the path. Now, every once in a while, there's a cheat code here, right? Imagine there's like a rock here, and it has like a pulley, and it'll just take you all the way up. If you're going to take shortcuts and try to jump to this rock and do something very high risk, and you end up falling all the way to the bottom, flat on your face, you can't take another shortcut to get back to where you were. The only way back up the mountain is slow and steady, slow and steady. And it's going to give you plenty of time when you walk your ass back up to think about the mistakes that you made. So when I was down 7%, I had to remind myself there is no shortcut that's going to get me back to where I was. I have to shake it off, get back here, and then build back a cushion slowly. So I reduced my risk down to below 0.25%, and I was looking for 3-to-1 trades. I kept taking these like 0.2% risk trades and making back 0.5 or 0.6. Risking 0.2, making back 0.5 or 0.6. After 3 or 4 of those, I had built a good cushion for myself. And then the trade from yesterday hit, absolute slapper. I'm still holding those runners. And then this short hit and really made up the difference. So now I'm in break even. So you only need 3 or 4 good trades to build that cushion back up for yourself, but you cannot over leverage your way out of a situation that you over leverage your way into. All right, big key here. Anyone associated with blank doesn't get their cut. But I'm not mistaken, AWS makes up 70% of Amazon's profit now. Yeah. Retail is about 30%. Nonetheless, Amazon played a smart game. So you have to ask yourself, when did AWS overtake the retail business? It was probably 10 years after their inception. So 10 years of trying to build up the core retail business. Then they had the third-party seller service, and that was crushing. And then AWS started to have the rise after the government contracts came in. Denzel said, I'm down 9% on my funded next. Denzel, there's 2 options here. Your body's going to go you're going to go into panic mode where it's like, I don't even care about the account. Let me just see what I can do and make it back up. Don't do that. This is not financial advice. Obviously, do your own research and make your own decisions. If I were you, I would try to get from like the next goal would be going from 9% to 7 or 6% negative. I know it's not like the crazy goal. Everyone wants to be positive 6%. Yeah. Look, when you're a losing trader, there's a step in between profitability and constant losing. Okay. First, you have to stop the bleeding. So the first thing you do is you're bleeding out. You stop the bleeding and put pressure on it. Once you put pressure on it and stop the emergency, then you can start to look at surgery. Then you can start to look at stitching it up. Then you can start to look at the healing process. So don't think about going from negative 9% and then passing the challenge. What you need to do is prioritize taking the best trades only, being highly selective, using small risk to be able to build that cushion back in your account. So let me ask you a question. just to kind of test your understanding of this, Denzel. If you're risking 0.1%, how many trades can you lose before you blow the account? If you're risking 0.1%. Oof, this might be a swift recovery here for NAS. 88.6 off the previous New York session low. Oh, that's dirty. That's crazy. Oh my God. There's no way. No, we still close below. We got a double bottom rejection on the smaller time frames here at the 886. Kind of like a break and then retest kind of situation. This thing is holding. We're back above the Australia session low, the session lows here. So if we get a pullback to 78 or 88.6, this would be a good re-entry opportunity. The shorts are I guess they're still valid. This short entry here. At the 886, so and then scalp it down. But personally, I'm long or I'm bullish on NASDAQ, and so I would just want to wait for a pullback to this area so I can buy it again. So you have your higher time, or I have my higher time frame play, which is obviously the higher time frame trend is bullish. And so my job is to catch these lows, okay? And then to keep trading along with the market. So we've been doing a great job. Then we have these scalp positions, which are kind of hedges, which is whenever the market makes it up to a previous high, we can look for some kind of retracement and take advantage of just the location of where price is. And then eventually we get another pullback, and I'm looking for a re-entry so I can keep catching the trending move. So separate the higher time frame play, what you really want to see happen on the big picture, and the smaller time frame opportunities that you can day trade or scalp. I think the perfect trade size for funded trades should be 0.25 risk, 0.5% max, and at least unless you're a highly efficient pro trader. Okay, let's get clear about something. There is no perfect lot size for anything. It all depends on your win rate and your risk and reward. So if someone has a really high win rate, let's call it a 95% win rate. That means if they take 100 trades, 95 will be winners or 90 will be winners. Okay? And so there is a chance that they can lose 10 trades in a row and blow the account. But what's the chances that if you're going to take 100 trades, win 90 and lose all 10 and lose 10 only, that all 10 are going to come back to back? Statistically, they're going to be spread out in clusters of threes and fives in between some winners. So if you have a very high win rate, you can do a higher risk strategy. If you have a low win rate, but a high risk and reward, you don't need to go that big on your risk sizing because the return, like you can risk 0.2% and make back 0.5% or more, right? That's ideal, if I'm going to be honest. And so risk tolerance and then strategy results are going to determine how heavy you go in your account. Risk tolerance means some people are perfectly okay with putting on risk. Lose it, win it, don't care. I don't mean like some of you guys, like you're desensitized, but I mean they actually accept the risk and still don't care. They're crazy. No, I'm taking it easy. Roy, where the streams been at? Where the stream's been at? But imagine you are on the stream asking me where the stream's been at. Right in front of you. I'm right here. Nah, I'm gonna be honest. I was just preparing for the year. We got a shit ton of things going on. We have a world tour starting in March to go and do free webinar or free seminars all over the world, absolutely free from our own freaking pocket to go and provide free education everywhere in the world and bring out some of the biggest names and influences in those cities to come and join us. So I've been prepping for that, prepping for the summit. Tons of speakers want to come out. The biggest Forex companies in the world are in our email inbox, wanting to be part of the FX Summit this year. So I'm looking forward to it. But it's also been a crazy busy year. That's why I was taking time away from the streams, focusing on myself. And selfishly, I did enjoy having my time to myself and just focusing on my own trading. But we got an obligation here, people. I made you a promise I was going to stream for 100 days, and I plan on sticking to that promise. Steven, I will definitely see you at the FX Summit. You said May 15th. Buddy, I think you got the date wrong. The FX Summit is November 15th. Not in May. Okay, brought my account back to break even from being down 4%. Hashtag build back better. Yes, sir. My goal this year is to get funded 2 million at FTMO. Do you think this is too risky at the point in the USA? I'm in Maryland. Steven, did you even read the fucking news, man? Look, guys, I also want to hold everyone to a high standard. The article I wrote, the Instagram post I put up, every single piece of news outlined exactly what FTMO's decision is. So if you're just reading all this stuff and you're just literally not reading the sentences, and then you're going to get on here with this massive goal of being $2 million funded, but you can't read. What are we doing here? Right? So I don't want to be a dickhead, but Steven, go and read like 2 seconds of the news because it's literally been everywhere. It'll take you 2 seconds, and then you're going to have your answer. But to have this massive goal of getting 2 million funded, not understanding that they just kicked off all US clients, it's like, what are we doing here? And to answer the first question, the 10%, so if you have a 10% maximum, or sorry, if you're down 9%, you have, and you're going to risk 0.1% from now on to build back better. You have 10 trades before you blow the account, 10 losses in a row. You have 10 opportunities to build your cushion back. And that's how ideally you'd want to approach it. All right, guys, looks like the market's breaking out here. Looks like the market is breaking out. We're back above all of the previous levels. If this thing will load. We're back above all of the previous levels. Pull back to 16,812. And if we hold above that zone, like a wick, and then we just hold here, this could be a new entry level to go long. If the market breaks under and closes with the body below the Australia session lows, then this is going to be like a retest candle with a wick to then fill to the downside. Okay, so for now, I'm still bullish, still expecting a pullback here to the 805, 810 lows for a re-entry. Make sense? Buys below Australia session. Oof. Would have been nice. Good morning, Roy. Are you still taking on the Everblue challenge? No, that was over a while ago. That was over a while ago. I had a pretty terrible mistake with that one where I left a trade running overnight without a stop loss. I'd entered 3 positions. 2 of them I had adjusted the stop. The third one never saved when I entered the stop. It kind of just like froze a little bit and then it reloaded, and I assumed that the stop loss got changed, but it didn't have one in it. Woke up the next day. The trade played out, but it hit the maximum loss, and I lost that challenge off of, honestly, just a very stupid mistake on my part. But I am looking forward to doing another one because if I'm not mistaken, Blue Guardian is still around. Or is it Everblue? Everblue is still around. So do I think TFT is going to go under? I don't think so. But I think FTMO got the most scrutiny from everybody because of how big they got. And if you're the second in line, you're the second biggest, attention's eventually going to turn back on you. So I'm not 100% sure. And I'll be honest, guys, I'm already making plans to get away from the prop firms until they figure their shit out. And then here's my deal. Because before, I was actually very against prop firms at first. when I first heard about the idea, because when I first started using FTMO in 2020, I realized how big of a benefit it was because instead of me funding these Hugo's Way accounts and having to over leverage to make my money, now I can just leverage someone else's capital. Instead of putting 5 grand in a Hugo's account, I can take $500, or I can take the 5 grand and buy 10 fucking challenges. The game really did start to open up. Once I started seeing the statistics of how many people were actually losing and the Ponzi nature of nobody actually getting funded, I started to have this like reservations about prop firms. Then I realized that the same percentage of people are losing on brokers. But the thing is, on brokers, they're putting in their hard-earned money and just funding this account and then just getting screwed. With prop firms, at least you're putting in a lot less money. You're leveraging your capital, so it's really high leverage opportunity. And so I kind of switched my whole perspective. I think that prop firms should be around to give access to capital to people who otherwise wouldn't have it. Okay. If you build a skill set for 2, 3 years, but you live in a country that does not allow you the opportunity to save money and build a giant trading account, you should have the opportunity to get access to funding. Now, what I think is going to happen is there's going to be 3 splits in the prop firm industry. This is my speculation, completely speculation. Number one, I think a lot of people will start to follow, the legit companies will follow the Darwin X model. Darwin X, I'm a big fan of what they're building, very close with their team, and I'm really trying to get them to come out to the summit and be a partner with us on the trading challenge side. But they're like, I wouldn't even consider them a prop firm or a hedge fund. It's kind of a mix where you trade, you get graded on it, and then they fund you based on investors put their money into a pool and you get funded based on your performance, which I think is excellent. The second model is a good friend of ours, Mike. He has a company called Levels. Levels is like a game where you literally just play, and the more pips that you catch, net pips, you get paid out. And each level that you rank up, the payouts get bigger and bigger and bigger. So it's the same idea where you're looking at live market conditions, executing trade orders, but instead of them pretending like they're actually sending your trades to market, it's just a game where you get graded on pips. And I think that that's going to be a way for people to get around regulation because instead of pretending to be a trading company, you'll be a gaming company and you can get around most of these laws. And then the third one is just going to be an evolved regulated prop firm model, which is the simulated firm admitting that it's all simulated and then just kind of having a lot of oversight. That's a likely scenario and the worst case for all of us because challenges will get double as expensive. If anybody goes regulated, they're going to have to pay so much in lawyer fees and regulation costs and licensing that they're going to end up passing that cost onto us, the consumers. And because of that, we're all going to have to pay double for these challenges. So that's really how the future looks for these prop firms. They're going to gamify, they're going to turn to a gambling company or like an actual prop firm where they have outside capital, or a real regulated prop firm, B book, A book model, regulated broker attached, and full oversight by CFTC and other US regulators, which nobody's going to do unless they're stupid. All right. I used to have a US broker license, or I used to have a US broker dealer license. And what I realized was that the scrutiny that we had with every single detail, like if I texted a client with a confirmation about one of their trades that they wanted me to put in, and I told them, all right, we executed this order, $10,000 in this JP Morgan fixed income fund, good to go. If I misspell a freaking word in there, I'm getting audited, I'm getting sent to HR that week. And they're going to sit here and look through my communications and correspondence and tell me here, these were things that were outlined that were deemed to be irresponsible behavior or you acting outside of your fiduciary responsibility. Fiduciary responsibility means professionals in the finance space have to take your interest above their own. So if you're mortgage officers, CPAs, financial advisors, certified financial planners, they all are subject to the fiduciary responsibility, meaning they have to look out for your best interest first. So they take me up into this auditing office, show me these text messages. I'm like, what's the big deal? The guy's happy. The order got placed. Nothing went wrong. Like, oh, but you said this incorrectly. Now, the firm pays penalties on every little mistake. The firm is the one that deals with a lot of the regulatory and legal oversight. You think small and medium-sized companies are going to want to put up with that mess? Like, be honest. So it's a crazy world. I don't think that the US is the best place for anything. when it comes to financial regulation. That's why all the crypto companies left. There's not a single one left besides Coinbase, and even Coinbase is beefing with the SEC because the SEC is a bunch of incompetent twats. That one's going to get me in trouble. But it's true. Gary Gensler is stifling US innovation and allowing the rest of the world to get an advantage over us by allowing these offshore exchanges to benefit from all the flow that's going outside the US. If you really want to protect consumers, stop forcing people to use sketchy platforms to circumvent regulation. Let people use platforms here in the States and then just provide an oversight. But no, they want us to use Korean and Chinese exchanges to move crypto around because they want to protect consumers. But gambling is legal. Like, what are we doing here, people? What are we doing here? The level of incompetence is through the roof. They tried to hold off. Here's why the XRP lawsuit took so long. Because they wanted to go after Bitcoin, but Bitcoin is the most perfect asset that's ever existed. It doesn't have a board that you can go attack and put up in front of a committee. So they went after the next best deal. Brad Garlinghouse, an American, who was running XRP, one of the fastest and most efficient payment rails that's ever been created. XRP is the secondary payment rail for the Saudi Sovereign Wealth Fund, which has over $1 trillion. So if whatever their top line currency is, they get sanctioned and they can't use dollars or whatever, XRP, they can move $100 billion instantly anywhere around the world with low fees. Okay, let's take this fucking company, instead of fixing the government payment system between the Treasury and between the Fed, between all the commercial banks and the Fed and the communication method, by implementing XRP and making this a great American company. No, let's litigate them for 3 years, disincentivize any more innovation in the country, and allow entrepreneurs to, if they want to build something, to go overseas or just give up on that dream. And then we wonder why the country's falling apart. He says, I don't know why you're shorting, bro. We're bullish. You don't know why I would short at the daily highs? Like, are you telling me that I should be buying at the all-time highs here and then assuming the breakout? Do you think that's a smarter move? Matter of fact, I'm taking this re-entry. But I'm only going to take a small position size because I've already made money today and I'm still in those longs. But this trade is pretty clear here. Higher time frame rejections. Previous 88.6 got rejected up here. I'm going to look for a push down to 16,806, which is about 50 points. And then I'll jump out for the day. Unless I get like a really nice retest for longs again. And I'll take a long position too. Oh. So why would I short at the all-time highs? Okay, let's look at this real quick. If I look left, are we at a buying zone or a selling zone? So let me just go all the way here. Okay, so over here, it looks like the market was retesting before this massive drop. So sellers clearly have an interest below the zone. Okay. If we're above it, looks like buyers step in, but not enough buyers to really get a push through. Let's keep going left. Oh, it looks like when price got here, a lot of sellers came through aggressively. If you ask me why I would sell at a previous sell zone at all-time highs, at the daily high, after a massive expansion with no retest, with an inflation print that came out that was negative, right? So this is higher than expected, but it's not good for the markets. I think that we can see a little bit of a pullback here. Now, keep in mind, I'm still holding these swing trade positions. And well, these are runners at this point, but swing positions from earlier this week, these longs. And I am still bullish, which is why I'm holding runner. I only hold runners in the direction of the trend. But that doesn't mean that we can't short at a higher time frame, 886 previous sell level with a nice rejection at CPI news. Beautiful stuff. Okay. Roy, what's CFDs versus futures? So CFDs are a contract for difference. It's basically a trading instrument or a trading, I don't know if you can call it an instrument. It's really just a way for us to trade by going into an agreement with the broker and just telling them. All right, so let me actually explain this in the easiest way I can. There are 3 layers, main layers to the markets. There's the first and the primary layer. So let's say you have the actual stock. You own a piece of a company, voting shares. Okay, so you own this, no leverage, no margin, nothing. You put $100, you bought $100. That's it. You own a stock. The secondary layer is called the derivative layer. The derivative layer includes options, swaps, and futures. These are contracts that derive from the primary asset, but they allow leverage and they allow a lot of like shady instruments to get created to basically just have more trading volume. So you can use high margin, you can hedge up and down. There's complex strategies with options and swaps and futures where you can like hedge yourself out of one position to the other one. And they're basically just betting on the primary market, but using tons of leverage and using these complex instruments. And then you have the third layer, which I would consider CFDs to be in this third layer here. And derivatives, you can also include things like mortgage-backed securities. Mortgage-backed securities, if you guys remember 08, it's like a basket of a bunch of different mortgages, and they package them together for this index, and you can track those. There's CFDs, and then credit default swaps, CDSs, which was an insurance policy against the mortgage-backed securities in 08. These are also part of the tertiary market. So a contract for difference says that if price goes from 899 to 877, and I have a short position in, you have to pay me. That's what a contract for difference is. It's the contract for the difference in two prices that I make with the broker. The reason that people would want to trade CFDs versus futures, whoever has their mic unmuted, come on, guys. Don't make me lose my train of thought. I'm on fire here. The reason that you want to trade CFDs versus futures is because hold on, I just had it. I had the three reasons lined up. Really, it's the fees, number one. Leverage is the biggest one, because if you guys trade on a futures broker, you're limited to 1 to 50 leverage in the United States. If you're trading on a CFD broker, which is all of these offshore guys and everything else, you're going to get 1 to 500 or more leverage. Now, the reality is that CFD trading is not legal in America. So the only way that we kind of got pitched on these brokers early on, the Hugo's Ways and these other guys, not knowing that we're not supposed to be using them. Let's be completely real here. After we found out, the prop firms, they were living in a gray area where, because they weren't a legitimate, whoever is not muted, get muted. I'm gonna ask one more time. But I'm trying to focus here. Bro, you see? Fuck. CFDs illegal. Prop firms were the fix. Now prop firms are starting to get kicked out because they're using their own brokers. And so the two options now are to go back to futures and find a regulated futures platform, or really it's just a regulated futures platform. Futures versus CFDs. I think it's going to be a big discussion for 2024. Roy, with CPI at 3.4, Sky Blue, you're no longer welcome. You're going in timeout. Too much trolling. Can you do analysis on gold? For sure I can. I'm in Saudi. That's BS. What part is BS? So much knowledge. Alexandru, welcome. Question, what are your 3 most important fib levels for NAS trading? I would recommend clicking the link in the description of the YouTube video, joining the NAS100 master class, and getting my exact strategy so you can win all 2024. I don't mean that to avoid answering the question, because I really do try my best to answer as many questions as I can, but I also have to respect the people that did commit to taking the class and really committed their time and their money to taking the class. And I would recommend you do the same, because the strategy it'll be given right to you. All right, I'm moving my stops to break even. I've already made money today, so there's no reason for me to overstay my welcome. And I'm going to allow this thing to finish pushing slightly. Actually, I'm going to take some partial profits here and just hold this runner. You know what they say, second time's the charm, right? I'm going to put my take profit here at 16,700. And there we go. And yeah, if you guys see my patience lower this year, it's not because actually my patience has gotten much, much better. My susceptibility to just be, I don't even know how to say this. I feel like I'm in such a better place, but because of that, I'm also respecting myself and my time more. Guys, nobody is going to be out here calling trades like this because that puts their own reputation at risk every day. Every day I'm showing you guys the trades. Like I'm not like firing off random trades and losing all of them and like all this shit. This has been a hundred fucking days last year, and then now we're still crushing. Like yesterday's trade absolutely popped off. Today's trades are doing great. We have a bunch of re-entries. I'm not only taking one trade. I'll take a trade, make money. It'll come back to entry. We retake it. Those of you guys who show up late, who didn't get in the first time, who are upset, you can get in a retest. Like, we're really giving out so much fucking value that I'm not going to accept anything other than serious traders who want to make money. And obviously, we're still going to be entertaining and we're still going to be doing stuff. But if people are like asking shit that has nothing to do with making money, and you guys are not taking advantage of this shit, then I'm just like, right? Like at this point in this year, it's all about respecting the time, and that's going to be the theme going into 2024. All right, good morning. Still doing top steps, $79 for a 100K account is crazy. That sounds sketch. That sounds like you're not getting paid out. $79 for a 100K account makes no sense. That is not profitable in any way, shape, or form. He said, IDK, while you're shorting, bro, we're bullish. We should go from traders to gamblers. Well, no. But Josh, you're really confusing me, man. Every day. Guys, let me know something. Put something in the chats that's going to revive my faith in humanity for a second. Please, somebody give me something. Ask me a good question. Bring up a topic that's relevant to markets or life or present events. Give me a debacle you're dealing with. Give me a trading issue that you're dealing with that we can help you with. Something fucking productive, please. I've been scalping buys and sells all morning. Mike, you're the only person I'm not going to say a damn thing to. All right. If anyone can pull that off, it's you. But just trust me, man. Less is more. Because what you're doing is you're going to be building bad habits that then later come back and bite you. And that's something that I found out. Like all the mistakes I made are not because of some like random shit. It's because for the first 2 years of my trading, I built bad habits. And every once in a while, you're having a bad day, not like a bad day, like you're recognizing a bad day, but you're just not really on your game. And then you're going to go back to old habits because we do what is the most familiar. And so make sure that whatever actions you're taking, Mike, you're building those habits for your future self who is managing millions, not for your present self who's going to milk the current account. Okay. Look out for your future you because they got to live with the decisions. Says Roy the GOAT, but you pay monthly. I'm not. XRP has nothing to do with Saudi Arabia. The UK remittance firm. Hold on. Well, let me see if it was Saudi or UAE. Oh, it was SBI Holdings. It was the oil company, Saudi Aramco, which basically is the sovereign wealth fund, if we're going to be completely honest. Like, let's be real. And don't get me wrong, if you're Saudi, hats off to you guys. Arguably the most successful sovereign wealth fund that's ever existed. And in the next 10 years, once technology takes off, will be one of the most successful sovereign wealth funds ever seen. All right. So basically, if you guys don't understand, Saudi Arabia sold futures on all the oil they intend to pump for the next X amount of years, sold that out to international governments and companies, took that money up front, invested that in things of the future like AI, technology, computers, all the rest. And then they're going to basically just milk that going into the future if the oil dries up, which obviously we don't expect the oil to dry up, but you'll see. Strategic alliance with Saudi Aramco, semiconductor programs, initiate a new venture, promote growth cryptocurrencies in Saudi Arabia by signing a memorandum of understanding. That doesn't really do anything. This is not what I'm looking for. I think it was. We'll find it. It's not relevant right now. Oh, I think this is it. This is it. Let me turn off my ad block here. Okay. Dubai Central Bank has signed a deal with US-based Ripple to help banks. Jesus Christ, man. To help banks in the kingdom settle payments using blockchain software as Gulf regulators begin to explore new forms of financial technology. So, in case you guys don't know, the current international payment system is called the SWIFT payment rail, SWIFT. And that's where all central banks are connected. That's where a lot of international commercial banks are connected to send money to each other. And it's the slowest, most inefficient, most fraudulent thing I've ever seen. Because that's why all money settlements in the world follow something called a T plus settlement. So time, which is 0, plus whatever amount of days it takes for the transaction to settle. So a lot of like if you do brokerage transactions, they typically have a T plus 3 settlement. So you put in the money, you buy the thing, and 3 days later, the thing settles. If you guys see your payment processing on a bank over the weekend or any other time, and someone sends you a wire transfer, there's a T plus 1 or a T plus 2 settlement on those transactions. And so the Swift payment rail, very slow. XRP is instantaneous, like instantaneous payments. You want to send 100 billion, send 100 billion instantly across borders with very little kind of pause. And so because the Swift payment system is used as a bargaining chip and as a way to sanction countries that America doesn't like and to kick them out of the international payment system, they're looking for an alternative, which obviously makes sense. BRICS as a currency was going to be that thing. But honestly, would we rather use BRICS or XRP? I don't even think that's a question for any of these guys. XRP is obviously the most resilient and the most effective as a technology. All right, for those asking why would I short? Well, we're up about 60 points right now. 60 points. The original risk on the trade was about 50, so now we're just slightly above 1-to-1 on this trade. Partials booked again. This is my second sell opportunity, by the way. I already made money on the shorts the first time. This is just extra credit. Oof. I got this deadline at 11, so I might have to hop off here pretty soon, y'all. Just gotta make sure that everything is locked in. All right, partial profit secured. Uh, stops are in break even. And I'm doing a little review here to see just exactly where we're at. Retest of the Australia session lows. This could actually be if it holds, this could actually be a push back up right here. If it holds. I'm already in way too many positions. We're near the all-time highs, and so I'm not looking to just keep forcing trades up here. But just to let you guys know, we already had the phase 1, phase 2. So naturally, the next best thing is continuation. Good R&R on that trade. I'm gonna give it one more 15-minute candle. I just want to see this thing at least try and break through and then come back up. I want to see it at least try and push through. Because what happens is if sellers don't at least make an attempt, then you'll be sitting in a long position and then sellers will try to make their move and you'll be in a lot of drawdown or get your stop loss hit and then it'll recover. I at least want to see, all right, let me see sellers, let me see what you got. And they're going to try to push it through and buyers are going to absolutely clap them. Right? And that's when it shows that buyers have way more volume in today's session than sellers do. And that should give us the confidence to be able to hold that buy position. All right, y'all. I gotta hop off. Tons of great information today. CPI news came out. Tomorrow we have PPI, which really, I don't even know why they released CPI before they released PPI, but this is again producer price index, inflation index for the producer side, about a 2-month lead to CPI. So this is a leading indicator to what we can expect for the next CPI print. If producers are paying more, eventually it'll get worked down to the consumers. So tomorrow, big news day again, and we'll just come back and review tomorrow morning. I'll see you guys bright and early. Happy and safe trading for the rest of the day. Please drop a like if you guys enjoyed this stream or learned anything at all. And if you didn't learn anything, yeah, you just weren't paying attention. So go get some coffee next time. Wake the fuck up, and let's have some fun this year. All right, everybody, take it easy. Peace.